Yeah, we could go right into it. We can say hi and how you doing. So we're starting now. We're live now. We're good. We're recording.
Yeah, we're recording. We're live. We're
All
up.
right, it's up and running. Okay, hi everybody. It's Ashley coming to you from Vancouver, BC. We're at the Traders Journey podcast. Sorry for the little delay. We had some technical issues, but we're not even going to give you a break. We're going to get right into it right now. So uh, this is Saturday, January 25th. And what should we talk about? Well, what should we talk about, Isaac?
Oh, there's so many things going on in the world right now.
There is a lot of things going on in the world, but let's really be honest. It's the Don show right now, right? The Doninator, or Trump 2.0 show, whatever you want to call it, right?
I heard
He,
Donald Pump.
but he's doing his thing,
Yeah,
right? He's being Donald, and he's blustery, and he's doing his thing, and you saw I don't know if you saw it, but there was a whole bunch of military planes being loaded with unsavory illegal immigrants, and the plane couldn't land when they took it back to I think Mexico. Turned around and said, "Nope, you're not landing here. Bye." So they turned around and came back. So I don't know how that program's going to work, but there's just a lot of stuff going on, you know. Um, but look, it is what it is,
you
you
know,
know.
at least he hasn't mentioned that much the wall that he was like he was talking about every day the first time he was in the office.
Yeah, like
That is funny. As a Mexican,
2016.
yeah, as a Mexican, everyone's like,
Yeah,
"Oh, the wall, the wall, the wall. He's gonna build the wall." Now, no one cares about the
yeah.
wall.
No, interesting, right? But remember what he did in 2016. Not just the wall, but tariffs, right?
Hmm.
He said that too, and it's the same thing. And at the end of the day, it is what it is. But the thing is, he moves the market. That's all we care about. And right now, investors, traders, we're just trying to get a sense of where he's going. I mean, he even turned around and said, interest rates too high. We've got to get them lower. I demand that we drop the interest rates. So I'm telling the Fed to drop the. I'm telling everybody around the world to drop
Yeah.
interest rates. It's like, you know, this guy. I mean, it's I kind of it's entertaining, right? You don't have when it's not boring. Come on, it's fun to get up in the morning now and listen to this stuff. And what has he said now? What has he done now? What's he going to say? What's he talking?
Hmm.
The big conversation about turning Canada into a 51st state. Like, okay, Doc, no problem. And, you just kind of like go with the flow and just kind of, see what it does. Yeah, I still say it's just negotiate, it's just this thing, right? You can't,
Yeah.
you know, you can't
Well,
fault him for that in that regard, I guess.
but I think, yeah, as a trader, you need to just adapt to what the market is gonna do with his reactions. Like the whole market reacts, but I had this experience this week that I regret. I shouldn't trade anything, and I did. And there was just high volatility everywhere, and I got affected. I mean, I had a good profit, and then the day after, I had a big loss. So, I mean, now
Yeah.
I mean, and I heard. I think you said like maybe just wait to see what happens. And I also heard from many people that they're not trading because it's like kind of risky, a lot of volatility. Now I
Yeah.
learned, yeah, I learned by my experience.
Well, I've been trying to trade the New Zealand US dollar, buying the New Zealand dollar for a long time. And I had some losses, I had some wins. But finally, I've got it moving in my direction, and I'm doing quite well, and I'm doing okay. And it took a while, right? So nothing changes from a trader's end on how you prepare and how you plan, and if you have your levels plotted correctly, and you just follow it, and just be smart and just realize, yes, there's going to be a lot of volatility. What does that mean? It means there's going to be a lot of up and a lot of down and a lot of up and a lot of down, choppy waters, right? No clear
Direction.
directional bias, right? It could go up a long way, then come back again, and you know that creates uncertainty. But the world is uncertain right now about things, so that means we have to trade cautiously and be adaptable. It's one of the things with I learned when I was in my journey that professional traders, and I'm talking about traders that trade for prop firms, and, big companies, and banks, and stuff like that, they are never married to their position.
Mm-hmm.
Now, I look a lot, I read a lot, and I go on these sort of you know uh, Facebook groups or on a YouTube channel and read things. And, I hear narratives, and one of the things that I hear a lot from retail traders, yeah, place a trade and just let it be. Don't touch it. Either go to its target or go to its stop loss. Yet, if you talk to a professional trader, and I've talked to many, they're like going, yeah, the whole idea is to increase your account. You've got to grow. You've
Yeah.
got to grow the account. And I go, well, yeah, and I get that. Now they have targets, but they are quick. They quickly turn it around if they see. I'm going to give you an example. So let's say the whole bias of the Great British USD is down, which means there's US strength, right? And that's on the largest scale. But when they see some news come out temporarily, we know it's temporary, that goes the opposite way, they're going to turn around and trade the opposite way
Mm-hmm.
to gain some money to put in their portfolio, because that's what it's all about. And I've had conversations with a lot of these you know, traders for banks and professional traders. And they tell me the name of the game when your head trader looks at you and looks at your account and says, oh, you're trading in the wrong direction. They never say that. If you make money, the question they also, how come you only took that? You could have made more.
Mm-hmm.
And how could we have squeezed more juice out of it? We just want that one last drop. That's why it's so really stressful for traders, because the demand is, oh, you made 6%, or you could have made 7. If you had done this, you would have made more. So that's why they have a like in-house prop firms have a psychologist, right, to help the psychology uh, to push these traders to be performing at the highest level, right? So they're not going to turn around and you know, what I've asked a lot. I said, well, when you're selling, let's say, and you see something that causes you, oh, this could possibly turn around, do you close out that other trade? Because no, not necessarily. Sometimes we take half the position on and we go the other way, and then when that other way position is busy, we go back in. The in and out, you're in and out. You're working the market, and at the end of the day, you want to have grown. Even if it's 1%, 2%, right? They have big accounts, right? So it's a little different from the game that we play, right? And the banks are the only one that I know of that are entirely in the big play, because they can afford to be in the big play,
What do you mean the big play?
right? Well, the big play being they want to be buying the euro.
Mm-hmm.
The long it's going to gain strength again, which I think it is, but is it ready yet? And they're not caring about the other stuff that's, it's selling off, or it's a little bit of this, a little bit of that, because they have other people in the trading framework that take care of that stuff.
Like they can afford some risk, like more risk than traders
Yeah,
can, basically.
yeah, heavily. Now let's be honest. The big bank that crashed, the one in California. We had another one in, I think, I don't know what bank it was now. It's a big one,
They,
right?
they crashed.
Yeah. And why did they crash? They were over leveraged,
Mm.
meaning they took too much risk on. Every time a big company fails, the 2007 um, housing crash was because they were over leveraged to the hilt because they thought, oh, housing will always go, it'll always be safe. It's safe. It never crashed. Well, guess what? It crashed. And when you're giving, and I believe everybody should have a home. I really do. But when you're giving people, you know, mortgages with nothing down, no job, how are they going to pay it? Of course you're going to. Of course it's going to crash eventually. And the movie, right? The Big Short.
Yeah,
I always thought
really
people
good
were,
movie.
yeah,
Yeah.
and it's a true movie. And the thing is, it's like the reason they all crashed is because they're over leveraged, and
Hmm.
this is what happens to on a smaller scale. This is what happens to a retail trader. He overtrades. He gets over leveraging. Wants to grow their account really fast, and this becomes. Oh, listen, I had the same thing. I had $14,000 loss in one day. And yeah, it's not a lot in the grand scheme of things, but you have to remember that was like
You,
15 years ago.
you, you,
So
you, that reminds me of something, but after you finish this, sorry,
yeah,
I
no,
wanted
I
to
just
ask
want
you.
like it's relative.
Hmm.
It's relative. Money is money, and the size. Is it a million? Is it 1,000? Is it a trillion? Is it a billion? I can't fathom some of these amounts that come out. It just blows my mind. Why? Because I've never been surrounded by that. To me, where's my limit of money? And it's just like my paltry $250,000 dollars is nothing compared to, some of this money these guys are trading with. It's crazy, right? So we are only, involved as much as we can be, and we're restricted from our own means, if that makes sense of what I'm saying, right? But it's just money because it doesn't matter if it's a million, a trillion, a billion, or thousands. But it does matter because, for example, oh, you can get started with $100 account. Well, why would you?
Hmm.
How is that going to change your life if you enter a trade? What are you going to make? $4?
Not
two
even.
bucks? It's not going to
Yeah.
make any change. I used to have this exercise with my teaching group when I taught the students at the college here. And I would say to them, I said, okay, you're in a trade. It's Friday. We close down Friday at 2 p.m. our time, right? The markets. I said, it's coming close to 2 p.m. You're in a trade. You're up some money and you're close to your target. But what are you going to do? Are you going to leave it over the weekend or are you going to close it? And here's how much you're up, $6. So in every sense, every time I ask that question, every single student, and I ever read, there used to be about 20, 18, 20, 21, would say, I'll leave it open. So then I'd say, okay, same scenario, but you're up $60. Then we get someone to say, oh, no, I'll close it.
Hmm.
So the choice is to close or to leave it. No take half or anything like that. That's the choice. So I said, oh, okay. So two people said, oh, I'm taking $60. $60 is value for them, right? Then I go, okay, what about if it's 600? Now more people say they're going to close it.
Hmm.
And then when I say 6,000, everybody closes.
Yeah.
But then there's a stipulation, well, I'll take half of them, but yeah, but you can't do that. The choice is just there,
Yeah.
right? So why does it change? Well, $6 makes barely buys you a coffee at Starbucks, right?
Yeah.
So psychologically, it don't mean shit. And it's like $60. Oh, you know what? You can buy a nice lunch for two for six. Well, barely, maybe breakfast. So some people it has some value, right? 600, or you can buy some sneakers. You can buy some dinner. It can help you pay a bill, right? It can help you with paying the rent. 6,000 is a big change, right? So
Yes.
psychologically, it's like, yeah, that means something. So when you look at it that way from a retail point of view and from normal people, right, it makes a hell of a difference. And you know, when we talk about these big guys trading, money they're using, it's just sick. It's just like, holy shit. oh, if I could just have 0.0001 of that, I'd be laughing. We don't, right? So I think it's, people say to me, we talked about the funded accounts, right?
Hmm.
And, you know, I am a big proponent of that funded account because it just squeezes the discipline out
Hmm.
of you for you when you want to trade your own money. And look, I have people come to me and say, yeah, I have a good chunk of money. I've been left this money. I want to trade with it. I said, don't touch it. Just put it in a GIC, put it in something, buy some bonds, buy whatever, right? Let it tick over, take some money, and, do the funded account. If you want a bigger funded account because you need better buying power, then buy a bigger funded account. And, the barrier of entry is a lot. I found it a lot financially more reasonable, and you get a split. And here's the thing. Here's the bizarre thing.
Hmm.
So people say to me, so if I buy a $250,000 account, it's going to cost me $150 US, and it's like, but what's my buying power? I can only use a portion of that account. Of
Yes.
course you can, but it's so what, right? I said you can still make a pretty good chunk of change out of that. So what if I had my own money? No, if you have your own money, how can you? Do you have 250,000 to trade with? Well, no, but I have 5,000. It's the same. I says no, because you're risking the whole money. You're over trading. You're not being disciplined. And we're using this, funded account to get you to be disciplined. You need to be trained. You need to be, in a position where you can work the system. Does that make sense?
Yep, makes sense. Yeah, I
So
am.
fun.
Yeah, I was thinking. I was reflecting about it this week. That with this loss, big loss I had. Well, not big loss for me. Um, this week, that I was like, maybe I should wait till I get more practice with the funded account. Maybe I think for me it's better to use the funded account and start using it, get the experience, the practice, the knowledge, and use
Yeah,
my
yeah.
live account only for like long term investment, like not too risky, maybe ETFs and stuff, and be more like yeah, more like a trader with the funded account. And I think that's a great um, strategy, I guess.
Yeah, I think you're right because as you start going along in the funded account and then you see a setup that is, oh my God, I have seen this before. This is perfect. This is like 98.9% going to work out. You now can go to your real account and go, I'm going to put one trade in and I'm going to take this percentage, my risk 2%, fully traded in that trade. Because why? Because I've seen it before. I've seen it play out. You still trade it in your funded account, but you also now have your live account, your other account. But when you really, really like, yeah, I've seen this many times, I know it, and you've done your work, and everything is good, and that's a lot better.
Hmm.
And so, because what happens with traders is that we want to be in the game. One of the hardest things to do is when I've seen new traders, they're not in a trade, they get itchy. They go, well, I need a trade, I need a trade. It's like a fix, man. It's like, no, I need a hit. Adrenaline rush, right?
Yeah, you know that
And
happened to me as well. Yeah.
yeah, and it still happens. And it happens to me too. Sometimes I'm not in the market. People say, oh, well, it's nothing. And then what do I get? I get this. Oh shit! I should be in the market. I guess these people are looking at me to help them out. I should be in a trade. Like this, like no, I'm not. I don't want to be in a trade. I'm not. It's not set up for me. I'm waiting. I'm a waiter guy, right? I
Hmm.
go no. It's going to be above this or below this. That's what I do. Well, you could have made 80 pips. I said, yeah, I could have, but I could also gone the other way and lost it. So
Hmm.
it's like I do what I do because I'm chill, right? Yeah. I mean, when have you ever seen me stressed with trading?
Yeah. No. No.
No, right? And it's like, yeah, I did this. And, I had a good week. It wasn't bad, right? And well, I could have been better because I traded the JPY because I thought I was going to get some strength with JPY. They increased their interest rates, which they said they were going to do. But I should have waited for the speech to come out because, of course, just like the, you know, Japan Central Bank, they give and then they take at the same time. They turn around and threw water over the fact that there may be more increases coming. Oh well, we see. We're going to look at the data. We don't know what's going on, and then the terrible Trump, tariff mention.
Mm-hmm.
Oh fuck! And it just ruined it, right? It ruined. It got weak, and then people were trading against it. Of course, I was in bed when I came out. Oh, shit, right? So I lost those trades. I lost like three in a row, right? And I was having such a good week, such really, really good. And this is on the funded account. And I'd had a lot of pending, pending buys, pending sells, So sorry, my fault. So yeah, so it becomes tough to sustain the growth sometimes because you get hit a little bit. But I just, I carried on. I followed I said, okay, I'm in my buy for gold. I'm in buying Great British Pound JPY. I'm buying Great British Pound Aussie. I'm doing the New Zealand USD, and I'm okay.
Mm-hmm.
Just had a little glitch, and the glitch wasn't, it wasn't tons of dollars or anything. It's like, you know, it wasn't painful. Does that make sense? It
Yeah, yeah.
didn't hurt me so bad that I couldn't deal with it. Um,
This was with your funded or with your actual account?
no, a little of both. A
Yeah.
little of both. Yeah, a little of both. Uh, I'm more active in my own account, obviously,
Mm-hmm.
but the funded his account is to help, mainly my clients to work with them, right?
Mm-hmm.
Because that's what I. It's very hard to take somebody that has maybe $1,000 account and you have, $100,000 account and trade the same.
Mm-hmm.
It's difficult, right?
Mm-hmm.
And you know, if you're on the same level and you go apples to apples, you say, well, I got a 10,000 account, you got a $10,000 account, let's do this together, right? It becomes easier.
Mm-hmm.
Now, of course, I have a group right now for young guys, and they went and got funded accounts. What did they do? They didn't get the 10K. They went and got the 50K. It's like, why did you do that, guys? Why? Because they want to grow quickly. That's what they thought. And they're
Mm-hmm.
struggling there. They're having issues. They're having problems. Because I'm very kind of like, you have to be very kind of strict, guys. You have to be very disciplined. And they're frustrated with the rules. I said, yeah, but what was happening before you came to me? You were losing hand over fist. So you're now back to the funded account and you're trading exactly the same way you were before you came to me and asked for help. And I give you all this structure, right, and this framework, and you've thrown that structure and framework out the window, and you're trading the same way but adding a little bit of the stuff you've learned with me. And I go, yeah, you're right, coach. Yeah, I know I'm right. I can see it, right? And it's like, you know, it becomes sad in my way because I said, guys, you are trading with hope. Hope is not a plan. I, I
Yeah.
know, sounds fun, right? Let me explain, right? We hope things work out, right? That's when you make a plan. We hope things work out. You've made a plan. So it should work out. But however, when you start seeing it's not working out, what do? You adjust the plan.
Mm-hmm.
Does that make sense?
Yeah, makes sense.
Right. So the plan has caused you not to be, oh, all is gone. You haven't lost everything. So to turn around now, if you go to a casino and you put all your money on, roulette black, you cross your fingers, I hope it hits, right? That's gambling.
Yeah.
That's your hope, right? But if you've got a long-term goal of trying to achieve something, this is why we talk about the why, why are you doing it,
Mm-hmm.
right? It keeps you focused. Mine's retirement, guys. I always said that I wanted extra money and I need it for when I retire. I needed help because we all need help. So and I don't live a lavish lifestyle. I'm just kind of a simpleton. I get told off when I wear shoes for over a year. I should be buying more shoes. It's like, yeah, okay, doesn't bother. But I like, what do I like? I like my sports. So I have all the sports channels to watch all the games and hockey and soccer. And that's what I like. That's what I spend my money on. I spend my money on Games Workshop models, all that kind of shit. That I talk to you talk to my wife who's all that money wasted. you know, it's, it's just different, right? But we get back to this trading scenario. People say, "Yeah, I want to make money because I want a better life." Okay, great. You know, so what's going on is that they're going, "Yeah, I hope it works out." I'll give you an example. There's one of the guys at the front of the account saying, "Oh, I've been doing it 4 months and I'm getting nowhere."
Mm-hmm.
I go, "Okay, so why are you not getting anywhere? What is the reason? Are you following the process?" Yes, yes. Give me your daily journal. I don't do it. Yeah, see, where's your trading journal? Yeah, but I know where's your trading journal? Don't have one. See, you're not following the process. You're not coming at the end of the week. And how do I know this? Because we meet once a week. It's like, what's the US dollar doing? What about gold? What about NASDAQ? What are you looking at? What are you looking at? Okay, you're after a trade now, right? This is what they're after. They've been with me for a while, right?
Mm-hmm.
And that's not the process, right? Do the process. And then and then send me your charts. Send me and say, this is what I'm looking at. What's your thoughts? Have I forgotten something? And it's like, well, no, you didn't send me that. You just said, what am I doing? So I send you my charts. And this is what I'm looking at gold. I send you my analysis. And I send you my bias.
Mm-hmm.
And my bias is usually goes something like this. So I'm looking to sell gold,
Mm-hmm.
and I need to wait for this, right? However, if it goes above this level, I am looking to buy to this area. Levels again. I have never hidden the fact that I trade levels, right? I trade two levels from levels and I look for levels, right? And I use Fibonacci, right? I use trend lines, and I think it's very simple, right? Of course, I think it's simple. But here's what happens, right? So they get, oh, so you're looking, okay, coach is going up. What are you doing? I said, nothing. I'm not doing anything right now. I already told you, but it's going up. It's going up. I'm going to buy it. Why are you buying it? Because it's going up. You don't know that. Stop. Follow the rules. Now, for context, if it's going up, we require it to close above a certain level before we will buy it. Does that make sense?
About
Because our
the
overall,
50%?
yeah. Well, let's not talk about that. But
Okay.
let's talk about the simple bias for us was to sell gold,
Yeah.
right? But I need to be under a certain level,
Mm-hmm.
which has been closed, before I think about looking for the sell. The process is be under that level.
Mm-hmm.
Then the process is for a retracement to 50% of the candle that violated that level.
Mm-hmm.
Then the process is, once that happened, to place a pending sell on that previous low that broke through the level. Now that level could be support level, a trend line, a price point, whatever.
Mm-hmm.
That's beside the point, right? I don't want to get into that. But why am I selling? Because of an overall reason. Could be macro, could be technical, it could be political, it could be, doesn't matter.
Yeah.
I've made a bias. That's before. So I prepared, made a plan. Now I'm executing my plan. I don't all of a sudden jump in and go, well, I hope it goes my way.
Mm-hmm.
I have a plan.
Mm-hmm.
Now, if I do that plan and follow that plan, and it doesn't go my way, I've got a stop loss, and I've lost and it didn't work out. Okay, didn't work out. My account has not been badly harmed, right? It's only, I've only lost, maybe I've lost like $40, $30, $90, right? So, okay, back to the drawing board. Why didn't I? Oh, the reason is it just didn't work out. The wrong timing. New Zealand USD is a perfect example. This is like I've been in and then I sold and then I'm buying again and I lost again. Oh damn, right, okay. So I think 2 wins, 3 losses, but still ahead of the game.
Yeah.
So not as much as I wanted to be, but now it's finally got in. We finally got USD weakness. We finally got that push up, and it's very close to my level that I'm trading to. It just took time, right? So getting back to the gold trade, right, is that when I say this, guys, yeah, okay, so my bias is down, but if it's going up, I'm waiting. It's temporary. Now what happened? He entered the trade. He entered it. It went up nicely. It did.
Mm-hmm.
But what happened? Came back down straight away. And he lost. He was really upset. And I said, because you are trading desperate.
Mm-hmm.
Instead of you sitting down and really focusing on the process of putting all those steps in, right? And I could try and think of something. I mean, playing a guitar is a perfect example, right? If somebody gives you a guitar, it's very rare. I know it does happen. It's very rare that someone can pick up a guitar and start playing Stairway to Heaven.
Yeah.
Right?
Yeah.
They need to learn chords. They need to learn stuff. They need some practice time. They need to understand. But there's some superhuman beings out there that are musically really. Elton John, the guy's a genius. Has started to figure it out really easy when he was young, right? So there are some people like that, proteges they're called, right? But they're rare, right? So normal people, you have to do that, and that's why we have to sort of understand that. In general, it's like when somebody's investing, right?
Yep.
They put it in, they put in money that they can afford to lose because that's what they're told, right? And well, I hope it does well. Well, when you look at the track record, let's just say you do the S&P 500,
Mm-hmm.
right? And we know, what did you say, 20%, right? In averages?
Like
growth?
from
I
20,
think you,
10 to 20%. Yeah.
all right, yeah. So we're pretty well confident that, if you put money in from a year-to-year basis, you're going to grow between 10 and 20%. Now, does that mean 1 year you could have a 3% or it could be a negative? Yeah,
Yeah.
it could.
Mm-hmm.
Absolutely. Doesn't mean to say that it's always about over that time period, right? Over time, right? So I've been looking even to this day. Like I constantly look over my method, constantly looking, can I get better?
Mm-hmm.
Right? And what if I'd have done this? And what if I'd have done that? So would I be comfortable if I'd have put my stop loss here and not worried about that? How would I feel? I'm always doing it. You can't do that if you don't write down the parameters of your trade that you entered.
Mm-hmm.
The reason you entered, why you entered, where you entered, why the reason, what was the trigger, all that stuff. You need that information. And you need to constantly mark every day, oh, I checked in and I was up here and did you move your stop loss? Did you? Why? Right? Because when you come to review it at the end of the month, you look at it, you go, or the end of the week, the end of the month, or whatever it was, and you look at things, where could I have gone better? What could I have done? Now, why do I, when I buy something or sell something, I manage it immediately, and if it breaks or closes under a trend line, I take off my trade right away. Because over time, over me checking it over there, I have realized that I can make more money.
Mm-hmm.
I can make more money for the market to go up when it'll come back down again and it tests that entry. Then it'll go back up again. And then it'll do it again. Sometimes it does it 3 times, right? Sometimes 4 times, or it goes sideways. Like you can make more money. So I learned that. And I go, now I'm doing this. Because a lot of people say to me, well, why did you do that? Why didn't you just leave it? No, because that $100 that you can make can turn into $300-400 if you manage it correctly.
Mm-hmm.
Not saying everything does, but the point I'm trying to make is that it's not about that. It's about what I did to come up with that.
Mm-hmm.
And that's me. You may not like it. You may go, oh, I've learned that if I take my stop loss and not put it under that second low, but put it under the real low right down here, it may be a 200 pip stop loss, but it doesn't matter for me because I can let it go and I'm okay and it'll make my trade. That's okay. I had a young girl student that used to be a student here, and she does really well now. So, I mean, she does really, really well, a lot better than me. Her uncle gave her a ton of money. She trades, and that's what she does. She goes off a higher time frame, and she's like an investor position trader, massive. Because why? She can handle it. She can handle it. I'm okay. So you only get to develop that if you follow the process
Follow
properly.
the process and have the trading journal.
And what? Sorry?
And have a journal.
I think the journal, yeah, because the journal expeeds, like it makes it faster. Because if you're tracking along and, stop loss is a perfect example for you, right?
Yeah.
How long would it have been for you to finally make that decision if I wasn't peckering at you every day?
Yeah, no, long time. But
Right?
still I would be
times?
struggling, yeah.
Right. So how many times did you go, Ashley keeps talking about maybe I should think about it, or maybe, right?
Yeah.
I was in your head.
Yeah.
And finally you went, yeah, you know what, I'm going to do this. So that journey was only 4 months for you. But if I had been peckering at your head, reminding you about it, and talking to you about it, and giving you an alternative, because I didn't just say this, I explained why. And I showed you, like, you only have a loss of this percentage, and it doesn't really hurt your account. You can get back in, and then, 3 losses in a row, you get 1 win, you've covered it all, and you've made a little more. And you started to see that, right?
Yeah.
And if you hadn't have got that, maybe you'd still be doing it. Maybe it would take you a year, maybe it takes you longer, right? And the journal is so important because if somebody comes to me and shows me a trading journal, a daily journal, right? I can figure out their challenges right away. And I'm not trying to say that to show off. It's not that. It's clear. It's clearly there. Oh, I know what your issue is. I can see what your issue is. If somebody says to me, he said, yeah, here's my training, and they write resistance, support, entry, stop loss. Okay, what happened? Yeah, I got out. Why? Oh, I don't know. That's not a trading journal. That's not you preparing properly. How does that help you? That's what you guys got to think. When you do something, when you're in the act of something, the main thing, when you do that main thing, what is the outcome of that main thing? Now, I talk a lot about first principles. What is first principles? For example, what is the first principle of learning a language?
The alphabet? I almost kill you.
Yeah. Perfect.
Yeah.
What is the first principle of math?
No.
1 plus 1.
Yeah,
1
yeah.
plus 1. Right. Okay. So first principle of let's make it a little harder. First principle of cooking.
Knowing how to cut. I don't know.
Well, preparation, right?
Yeah.
You got your ingredients, right?
Yeah,
You got to have ingredients, right? And now, what's the first principle of an ingredient? How to prepare it, right? Like there's all these first principles. So let's talk about the first principle of trading. What is the first principle of trading? Asset, any asset.
Buy low, sell high.
No, you've jumped ahead. The first principle is buying and selling.
Buying and selling.
That's the first principle, right? So now we take buying. What's the first principle of buying?
Buy low.
Perfect. What's the first principle of selling?
Yeah, sell high.
Now you're getting it, right? So if the first principle of trading is buying and selling, what's the first principle of finding a trade? Direction.
Detecting the
Direction.
entries. Yeah.
No. Listen to my words.
Okay, direction.
The first principle is direction, because you need to determine if you're buying or you're selling.
All right.
You start to understand now, right?
Yes.
All right. If people
I'm
were
gonna write it
to,
because this is gold.
if people would start to do that, it would make sense, right?
Mm-hmm.
First principle of bathing, of washing oneself, right?
Mm-hmm.
Using soap, water, right? What is the reason people bathe themselves?
It's a tricky question.
No answer for me. Well, we have dead skin. We want to wash it off. We want to clean. We don't want to stink. We don't want to smell.
Mm-hmm.
We want to feel good, right? You know. So we want to have uh, good hygiene,
Yeah.
right?
Okay.
Right. So, but when we go to a chart and we do something, why are we doing it,
Mm-hmm.
right? So when we go there and open up the chart and we look at it, we say, well, we need to determine direction. Why do we need to determine direction?
Mm-hmm.
Because we need to determine if we're looking to buy or sell it.
Mm-hmm.
Does that make sense?
Yes.
Right. So this is the whole premise of this first principle stuff. And this is the whole premise of you having a journal so you can expedite that as you go along. Because you will go there and say, oh, I did this and I learned this and I found this and I saw this. And here's one of the things why levels blow people's mind. Because they realize after I show them and after I've talked about it, and when they see those levels, they start to realize, oh my God, that low on that daily is right by that monthly, weekly level. I said, da-da. And they're going, holy shit, this is not as hard as it sounds, right? I said,
Mm-hmm.
no. Somebody asked me, they asked me a great question. They said, you talk about these first principles. So what's your first principles of trading and how you trade? I said, support and resistance.
Mm-hmm.
Well, support and resistance. I said, yeah. So, oh, so you just trade support and resistance? I said, well, no, I create support and resistance levels, ranges. So I could trade from a support to a resistance.
Mm-hmm.
And they went, oh, shit. I said, when you look at this, how I use Fibonacci, how I use these, open closes, highs, lows, you create that on a monthly chart and you drop down to a 4 hour and a 1 hour, I've created a range for myself,
Mm-hmm.
right? But that's quite a big range. So then you need to drop it down. So you drop it to the weekly, you drop it to the daily, and then you can trade accordingly on a 4 hour and a 1 hour, and you're making these nice trades. But the ultimate goal is to get to this larger position, right?
Yeah.
So if I take a range off of a monthly chart at the end of the month or a weekly, so this week, today, I will look at the market and I will see the weekly candle that just closed, and I would determine a 50% retracement of that candle. And I would start to look for trades, right, to that 50%.
So to determine the direction, which is the time frame that you look the most?
Uh, well, that's an interesting question, because if I looked at the monthly will tell me the overall larger scale.
Yeah.
Doesn't mean to say that that's I'm not trading that. It's more like, where is the monthly in terms of, is it near a support? Is it near a resistance?
Mm-hmm.
Because if a monthly price is near, a level of resistance or support, that's a very strong level of support resistance, as opposed to a 4 hour. Does that
Mm-hmm.
make sense? Right?
Yeah. Mm-hmm.
So it's like, I tend to do this. I look at the monthly at the end of the month. And I determine my levels. Where is the previous monthly high? Where is the last month's close and the new month's open? And where is last month's low? So high, low, open, close.
Mm-hmm.
Determine those 4 things. That develops my range. Now, where is price? Is it at the high end or is it the low end? Right?
Mm-hmm.
Now, if it's at the high end and we're in an uptrend and we're above the previous high, I'm looking to keep going, right? But we've got to watch these retracement levels. Would you like me to share a chart with you?
Sure. Always happy to see your charts.
Give me 1 second. So, what currency do you want me to look at?
Any. It's okay. Your favorite.
Oh, my favorite, eh? Okay. All right. Why not? Let's look at my favorite. If I can find it. What the heck happened? All right. Where are you? Where are you?
So, what are your thoughts for now? Sharing our traders' journey on the social media. Say you share a bit of your trades every day, every week.
Oh, so basically what you're telling me is you want me to do more work. Is that what you're telling me?
Yes. I think you have a lot to show, and also I can also show my progress if I can, if I'm gonna start my funded account, and I hope it goes well. Hope. But yeah, I think it would be nice to share, and then here in the podcast we can also talk a bit about how those trades went.
I think that's, I'm okay with that. If, I mean, people like it, that's great, right? So let me just show you this. See, like this is the monthly chart, right? This is the Great British JPY. Can you see it?
Yeah,
Okay.
I can see.
Okay, good. All right. If I look at this chart here, right, we've got this right from here. It's got a big down move. So what is, you tell me, what is the direction of overall direction of this?
This is monthly?
Market in your eyes? It doesn't matter what it is. It is mine. I just want you to tell me what you think the overall direction is.
It's hard. It's hard. But
it is hard.
I would say that starting December 2013 has been on an uptrend. I don't know if I would consider it a big drop in 2009, 2008. Maybe this was the recession, right? But starting 2011, I would say it's on an uptrend.
Okay. Well, the first principle of defining a trend is, did it start at the high or the low?
Yes.
And you can clearly see there's a high here, right?
Yes.
And it's come down here. This high has not been broken. So someone will say to you, well, the overall trend is down. Okay, you could say that. But just like you said, yeah, we were going up. The actual trading trend for me is right here. This is why sometimes defining a trend, this trend line here, is acting at some kind of resistance.
Can you scroll? Right? Can you scroll a bit to the right, because like you have like a square. Your camera is now a square, so now we can only see like the middle part. But I don't know if you.
Okay, can you see this now?
Yeah.
Can you see it?
Oh
yeah. Okay, so we got a down. You seeing it?
Yeah. No worries. We see.
Okay. All right. So this is where we can clearly see, it's kind of down, but this is kind of like people go, yeah, so I'm going to sell it. There's nothing wrong with that. But we got this high here, right? Because we had a high to a low, retracement, expansion, another lower high. So this one needs to be broken before we can go up again. It's like a very crooked chart, isn't it? But we know that the trading started here, even though it's from here. But where's the trading right now? Right from where you said, like 2020, it's been going up. So for the last 5 years, it's going, well, why do I want to worry about this? Right?
Mm-hmm.
I don't. All I'm worried about is the month because this is a monthly chart. So
Yeah.
I'm worrying about the month. Does that make sense?
Mm-hmm.
Now, I picked this for a reason because not counting this month, which is on right now, look at the previous 3 months, right?
Mm-hmm.
Very close to in a range, right? That's 3 months, 5 weeks, 15 weeks
Mm-hmm.
times 6, 15, 60, 80 days has been in this kind of a range area,
Mm-hmm.
right? Now, it's broken out of it. Like we got this low right here, very close to these bodies, opens and closes, right?
Mm-hmm.
And very close down here is even longer. Look at this. Look at these bodies here, all closing at the same level there, opening and closing. Now we got massive low down here and a big spike up, right? So obviously some stuff was going on here, but we don't trade on the monthly. We just look at. So last week we were up here,
Mm-hmm.
or a couple of weeks beginning of the month. I'm saying I'm looking to sell the Great British JPY because this is where we're at. Look where we're at,
Mm-hmm.
right? So to me, it's like, okay, that's a no-brainer. Now, every candle has completed the 50%. Look at this big one.
Yeah.
It didn't here, but the next one completed this 50% and then went on very close, but it wasn't until the next one opened that hit the 50%. But then after that, for the next 3 months, 50%, 50%, 50%. Every single one of them have hit the previous month's 50%. Can you see that? So does that mean we're going to get a 50% hit here? Well, we've got 1 week to go.
Mm-hmm.
1 week to go. Look where it was, right down here.
Mm-hmm.
Now, full disclosure, I was selling it until it got to this level here. And remember, I made a good $200 on that trade. I was telling you about the Great British JPY, right?
Mm-hmm.
But I cut out. Why? Because it was at that level.
Mm-hmm.
It started to go up. So what am I looking to do? If we're down here, based on previous, if I'm above this price level of 190.102,
Mm-hmm.
so that would be on a daily chart, the price will be above. What am I looking to do?
To buy.
I'm looking to buy out. Yeah.
Mm-hmm. And
And I did.
okay.
So why am I still not in it? Right? Well, because, yeah, all right, you have questions, ask the question.
mm. Um, when do you see this, or what do you think would be the indicator for this level? I see the support and resistance, but let's say if it closes up above this resistance, then that
This
means,
black line here,
yeah,
okay, I'll mark it off for you. See
yes,
these highs here, right?
yes. Can we zoom
So
in?
if I'm above here, no, watch, just watch, just watch me. Be patient, be patient. I'm going to color it differently.
Okay.
I'm going to color this color. So this is my support if I'm above it, right?
Mm-hmm.
That's going to be my support, right? I'm going to leave this one black because that's going to be my resistance. Watch this. I'm going to go to a 4 hour. See it now?
Yeah.
Right. What was my support? This one, right?
Mm-hmm.
Look where I am. I'm in the middle.
Mm-hmm.
So I got a way to go. But look where I traded from. This area here. Let's go back. Let's go back. So it's clear for everybody. Right? I'm going to change this to blue. No, I'm going to change the top one to blue. Change this one to blue. Okay. Now I'm also going to put this one here. You'll start to understand in a minute. I didn't expect to do this today, but I'm doing it. So this is a close open of the monthly, an old one, right? So I'm going to paint that orange. All right, see these levels now?
Yeah.
Right. So what do you trade on, 4 hour or the 1 hour?
4. 1 hour. Depends. 4 is okay. Yeah.
Okay, let's do 4 hour, right? Because I want to show you. At this level right here,
Mm-hmm.
right, we'll be looking, if we were closing, to sell it.
Yeah.
Down to where? Down to the other level. Do we have another level?
No.
We have no other level, right? So that means, oh,
Well, there's the
it's here.
184.
Could be here.
Mm.
Let's go back. Let's do it properly, right? So the level I would be with it would be this level right here. So you see these open closes and low here.
Mm-hmm.
I know you've got these here, but that's the level I would trade to. So if I go back to that 4 hour, so here I am, right? So at this particular point, I would be trading here. So why didn't I trade down to there? Why didn't I trade down to there? Because, well, maybe, I don't know, right? I had already stated to myself, I am going to go to here. That's it. And then I'm going to wait because I expect it to come back,
Mm-hmm.
right? I expect it to retrace because why? Because it hit a D extension on a Fibonacci. We're not doing Fibonacci today. It's just another step, another added thing to my arsenal. So I hit it, and here it is right here. It hit here. Great. Then it retraced up. And I am going to be very honest with you, and I'm going to tell you that I traded this down here. But it stopped. It didn't keep going. It went up, and then it closed above here. Remember I tell you I protect my trades? I do it again with a trend line.
Mm-hmm.
If I break this trend line and close above it, so this trade right here, I had a small loss. No, actually, it was just a small win because I did enter up here. So I got out. That's when I realized that this is staying here. How did I realize that? Well, this big candle here, then it went up again, and then it came back to test.
Mm-hmm.
And it did not take out the previous load. It did not come back to the backside. So now I know I'm buying. How do I buy? Well, I do exactly the same thing. Here's my trend line. Now, on this particular case, this broke out here and had no retracement. So I wouldn't have entered here, but I would have entered on this one because I got my retracement on this one. And yes, I know there's no retracement here, but I was confident and I decided to put in the trade, and away the trade went. And now I believe this has hit the D extension. Shy of the D extension. Using Fibonacci. And I'm actually going to go to the dailies. So we've still got a little room to go, but I'm actually out of it at the moment because this candle was a big candle, and I was expecting a retracement, and the retracement could be a little deeper. So I was waiting that I'm going to do a second entry to go trade to that. But where am I going? I'm actually going to this level right here. There's other things to it, but this is as simply as it gets. All I'm creating is a range for me to trade to from support, resistance, right? If I'm above here, support, resistance. Now I'm above here, support, resistance. I'm above here, support, resistance. That's it. But if I do it on the larger time frame, right, I'm from here going up to here. What do I use to get that? Now I will trade channels. Now here's another, like this is all price action stuff. Look at this crazy, crazy channel here, like a wedge, like, you know, like a blowhorn, you know, and it's like, look where it is. So where has this got a high probability to go to? It's go up to the top here. That's right by my
Mm-hmm.
green resistance line and by the trend line. So here I'm looking for a way to trade it. So how would I trade this? Well, I like to Fibonacci. So here I am. Here's my Fibonacci swing sequence, right? My low is my D. As long as I don't hit this blue line, my D is right here. That's my target, just above the green line high. Now, not to fight this resistance and support, I will just trade up to this blue line here. Does this? Probably not. But I found this on the monthly chart.
Mm-hmm.
That's how I found it. And that is a higher probability than going to a 15-minute.
Mm-hmm.
Oh, where's the trade? Right now, I can perfectly see a beautiful trade here. What do you see here? What do we have? We have right here. A lot of people have probably done this. We have got the double bottom.
Double bottom.
Right?
Yeah.
Yeah. So, we got the center point here, trend line break, boom, away you go. Now we got another thing too. We have another pattern. I'll take this one. They're all related, these patterns. Right? So you would have entered this trade down here as this, round about here, and then it goes all the way up to here to hit this high right here.
Yeah.
Now, what have I created here? A W pattern.
Mm-hmm.
Right? Where's the neckline? Here's the neckline here. Now, if you wanted a safer neckline, you could go up to this high right here and say, and look what it did. It actually reacted against that high, not this one.
Mm-hmm.
So it did that purpose. So look up here, here's the neckline. But the neckline for me starts on this side. So it should have been this one. So look, market went up, came back down a little further, then went back up, and I traded up. This is another pattern.
Mm-hmm.
And you can find these on the lower time frames. But could you have been more confident in this if you'd marked these monthly levels off, right, beforehand,
Mm-hmm.
right, on a higher time frame, and this, the monthly, and then goes to the weekly, and then the daily, and you will see things that are in your way or things that you can trade to.
Mm-hmm.
And when you line this like this, and you have this, and you're in the middle there, you can say to yourself, able to trade to. So I can take this trade. You become more confident. Does that make sense?
Yeah, makes sense.
So if you're like, okay, so if you had this, you say, well, I'm trading here. I'm trading this W. So I have my neckline. My neckline is here. Where am I trading to? Oh, well, you need to be careful here. Look, it went to here and started coming a little bit, right? But you also know you have another area up here, because if you go back to the monthly, right here.
You're cutting out a little bit. I think the internet.
So,
yeah, but I see the levels.
Yeah. So if I go back to that 15-minute, right? It's like, oh, I'm trading from here to here, but I should have another level higher. There's my other level. So look at this. So, we're trading from here and say, well, I like to use my Fibonacci. So look at these Fibonacci levels. Look, this one worked, this one worked, this one worked, this one worked, this one worked.
Mm-hmm.
And this is the current one right now. And here's the trade here. So that's the target right there, because I'm coming close to here. So you could trade these Fibonacci sequences, right, to this level. And if you don't know how to trade Fibonacci, well, that's another lesson. But that's how. So now, why don't I trade a 50? Well, because I'm busy and I don't use the 50 minute. The lowest I would use is the hour, the 1 hour. But we can change this to the 1 hour. There's the 1 hour. So instead of having that sequence, you got this sequence. It's pretty much the same. It's pretty close, but you still go into here. And we found that on the monthly chart. So you have a lot more confidence. Now, when you get to here, are you still trading up? Because if you go back to the monthly, well, you don't know right on this chart. If you go back to the monthly, you have a rejected highs, right? So you could turn around and say, well, let's go to the 1 hour, right? So I'm trading to here. Do I have anything? Oh, yeah, I got this. Highs were not at that high. So that might be risky.
I think at this point your computer but I think at this point your computer is like it's like exhausted or something.
Okay. All right. Well, we'll call it. I mean, the thing is, I was just trying to show you, a little difficult, I know, but we are going to add this training. I am going to do these trainings, and I am going to put it available to everybody so they can see it and try and make sense of it. But it's not as difficult as you may think it is. That's all I'm saying.
Can you disable your camera and then enable it again?
How do I do that?
Or just
from here?
Yeah, just click the camera button. Okay, yeah.
Is that better?
I think, for some reason, like, I don't know, maybe the computer is like tired already and your computer is lagging a bit. I think you froze now.
I'm frozen?
I mean, yeah, the camera, yes, but I can hear you.
Okay. They don't need to see me anyway. But
all right, I'm excited to see the JBP and JPY. How do you call this currency? How do you call it instead of saying the both currencies?
Great British Pound, JPY.
Yeah, there's no like nickname.
No, there's nicknames for individual, like the JPY is called the yen, right? And the Great British Pound is called the cable. But I mean, it is what it is. It's the Great British Pound versus the JPY. You have to understand that when you're trading currencies, you're trading one against the other.
Yeah.
When you do it spot forex, right? You're not doing a futures contract or an options contract on one currency, which you can do if you want. All right. But I'm trading spot, which is one currency against another. And it's actually, it's getting harder.
Mm-hmm.
That's one thing I was talking to somebody the other day.
What's getting
trading forex is getting harder than it used to be. I used to have runs of like 300-400 pips. Not getting that. Last 2 years has been grindy. And I think it's just the environment that we're in, And I was looking at my trades, and I was going, my God, Most I had on one trade was $295. And when I went back, 500, 620, one trade.
You know that that reminds
And
me of the. I had a question like at the beginning, and that, but I couldn't ask you. I mean, you were explaining something else, but now I need to ask you.
okay.
You shared your biggest loss, and would you mind sharing your biggest um, win?
My biggest win. Well, again, Great British JPY.
Yeah,
Over a period of, I guess, well, one single trade or multiples of on that.
I don't know. Same day, same trade. I
Oh, a
think,
day.
or
Oh,
or
okay.
or if you want to share, I think you share already your biggest loss. You said like 14 or 100.
Yes, yeah, $14,000 loss. $14,185 or something. I lost. Yeah. So the
But that
trading
was one
started.
trade,
Yeah, yeah. It was.
and you didn't have stop loss.
Oh, yeah, I
You
did.
had a stop loss.
Yeah, yeah. It was the Aussie yen, the damn yen, call it. And the challenge was with that was okay. I'll tell the story.
Tell the story.
So I had a trade on, and I had a level that I wanted to trade to, like an area. It's a Fibonacci.
Yeah.
And there was news coming out. Everything was my way, and it went like a rocket. I was like, awesome. And the pain doesn't really, the $14,000 doesn't really explain the whole premise of what happened here
Okay.
because I was up around 8 grand
Okay.
and I got greedy
Mm.
and I started, this is going to the moon. And I added another trade. It went up to, I can't remember the exact numbers, but the initial trade got me up to around close to $5,000. And I was so excited. I said, I'm going to wait for the.
Another level to entry.
No, 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 no,
Uh
no.
huh.
Listen to my words very carefully. I'm going to wait for the dip
Uh huh.
and I'm going to get in again.
Uh huh.
And I'm going to trade it up. Dip came, I put in another position. And I pull back in another position.
Yeah.
And I was getting so excited. And I actually believe, if I remember correctly, because I had this thing in my mind, I believe I hit, and people are going to flip when they hear this, 18,000.
Mm-hmm.
And I said, when I hit 20, I'm going to get out.
Oh.
This was my mistake
Yeah.
because it didn't get to 20. So the 18,000 started to pull back.
Mm-hmm.
And then the pullback. The problem is that I didn't realize there was news coming from the Australians too,
Yeah.
right after that. So came a bit of a.
Uh huh.
So then the pullback came to, 4,000, 16,000, 14,000. Okay, now I'm going to get back in. So I got back in. Oh, I lost that one. And it just kept going. 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 Now, you would think at some point I would have said to myself, okay, I'm at 10,000. I should get out. And I didn't. Total absorption of greed
Mm-hmm.
and fuck you attitude on the market. I know what I'm doing. You got to go there. The pain doesn't end there. The pain ends because I ended up blowing the account. But the real pain starts to manifest itself a few days later.
Mm-hmm.
The price went to exactly where I said it was going to go.
Oh no. Yeah.
So I talk about the $14,000 loss because the account was at $14,000.
Mm-hmm.
So I blew it. But that's not the real story. The real story is I basically blew $18,000 in profit.
Yeah.
Fuck. I talk about it now and I get chills. I get,
Oh, I can
you
tell.
know,
Yeah. Oh.
yeah, and I got smart. I didn't trade after that for over a year and a half. Not
Yeah, I
one,
can imagine.
not one penny went out on an account.
Wow.
But I think in what like people say to me, oh, yeah, that must have really hurt, big regret. And I go, well, at the time, yes, because it was savings, and it was tough on my family, and you know, it was tough. But I said, eventually, I started to realize that it was a blessing in disguise. It was a very expensive lesson.
Mm-hmm.
However, it was a lesson that built built me up
Yeah.
because of that. Does that make
Yeah.
sense?
Yeah. Yeah.
So
Totally.
a devastating, crushing behavior, loss, psychological behavior, all that stuff, in the end, made me realize what was important.
Mm-hmm.
I don't recommend people do this. I don't recommend that you go through that, right? But it was a different time. It was different times. It's just like nearly 16 years ago. No, not 16, maybe like 12 years ago. So it's different. It's different time. It's different era, different market, completely different. So, you
But
know,
now, your biggest win.
well, I think my biggest win, if I'm looking at it from a day point of view,
Mm-hmm.
from an entry to that day, I think it was over 17 grand,
Mm-hmm.
right? But over a period of time from that trade, which I was in it for about, I believe, 10 days, like two trading weeks, was, I think, over around 20 grand, just that trade,
Mm-hmm.
right? So again, it was the method of, closing out, adding in, closing out, adding in, and
Mm-hmm.
also total that ended up, I think it was around 22,000.
Mm-hmm.
And, but I have to say, that was a one-time thing. I have never really come close to that because I don't come close to that because it's more of a, okay, you know, I don't recommend stuff like that. I
Mm-hmm.
see. I don't like to talk about it too much because it's reckless in a way. It's like reckless because I had big drawdowns too,
Yeah.
and
But I
one
think
could
people are
say,
curious. I think people are curious. I'm curious. Yeah.
yeah, but I'm also, I'm aware of curiosity, and yeah, I'm going to try that,
No,
and
of
then
course, of course. There's a lot of risk involved.
yeah, and people like it was stupidity. I'm not. I don't show it and shout it because it really wasn't a good thing, right? It
Right.
really wasn't smart, right?
Yeah.
And I don't think I would ever, you know, and I have to also say, Euro USD, I was in a long, long, long 9-month trade, right? So that was $11,000,
Mm-hmm.
right? Very short, very small, but I just left it because there was just everything was telling me that this is gonna go. It's strong. The US is weak. Everything. And I think everybody in their cat made money on that because it was so obvious. So,
Yeah.
you know,
All
but
right.
yeah, hopefully it was helpful to people. Just kind of, we didn't really mention Trump much with the Bitcoin thing. He signed
No.
the Bitcoin declaration, right?
Yeah.
So that's another thing we have to look out for and see how that plans out.
No, but it's okay. We'll
And
still have a lot of news coming next week. I think
yeah,
then
we'll also, well, every day I think from that guy. We'll also see if we can talk about maybe Canada becoming the 51st state. It's like, is that going to happen?
Oh, I don't.
You know?
He's got radical ideas right now of and the view that I have is like he's trying to conquer the world. Like he's offering to buy Greenland, and he wants to take control of the Panama Canal in South
I
America,
know.
and then
Yeah.
Gulf of America. He's changing the name already. Like,
Yeah.
and this is not even the first week in his in the office. Like, he is
I know.
he's got this monopoly vision of the world that he wants to rule the map, basically. That's how I see it.
The Dollinator.
Yeah.
Yeah, it's interesting times, and it's entertaining, but it makes the market move. It can make us money, right? So
Yeah.
that's the goal. Yeah. Well, on that note, thanks everybody. Hope you enjoyed it. Again, if you have any questions, please don't hesitate to reach out to us. Let's see if we can help you on that. And yeah, I would consider doing this daily thing that Isa wants me to do. It's just, more work for the old guy. If I can help, that's good. On
Yeah.
that note, you guys have a good rest of your weekend, and hopefully you guys trade safe, and we will see you hopefully next week. Take
Bye,
care. Take
everyone.
care, Isaac.
Bye, Ashley.
Yeah, peace. Take care.